Once again, ladies and gentlemen, my name is Tasha M. Dyer, and I am the creator of the BYOB Cashout. I like that. I am the signal. I'm the creator of the BYOB Cashout, and this is BYOB Market Talks. Now, if you are joining us for the first time this evening, if you are new to BYOB Market Talks, if you are joining us for the first time this evening, let me get a 111 in the chat. Let me get a 111 in the chat. Now, if you are still learning how to cash out, good evening, New Jersey. If you're still learning how to cash out, let me get a 222. Welcome and welcome back. Welcome and welcome back, everyone. Welcome and welcome back. So this is what we're going to do. So for those of you all who were with us last Thursday, we were starting to talk about, and we were going to talk about Confluence, helping you guys understand the flow of the market. Okay, that's what we were going to talk about. We had a guest speaker on Market Talks. We had a guest speaker on BYOB Market Talks, and that guest speaker was Stephen Hooley, the creator of the Vibrata. So of course, we pause for the calls, right? You know, we pause for the calls. Now, if you, so what we're gonna do, we're gonna pick up tonight, and we're gonna talk about Confluence and Market Talks. And I think that everything happens the way it's supposed to happen, because if you were on a call this morning, oh my gosh, if you were on a call this morning, let me get a 777 in the chat if you cashed out, right? I want a 777 in the chat if you on that 5 a.m. call and you cashed out this morning. Now, what you did is you got more than 10 pips, right? We did more than 10 pips and cash out. That's what we did. We did a lot more than 10 pips and cash out. And so I want to help you guys understand that. And I want you to understand how this Vibrata can really, really, really take you to that next level. So I'm going to show you how to use this to your advantage. I'm going to come back in here and I'm going to show you how to cash out as well. Okay. So we're going to definitely, I'm going to walk you guys through that today or this evening. So we definitely gonna walk you guys through that. So let's go back here. I want you to understand, I got a few people on here. It's your first time on here, and some of you are still learning how to cash out. So I'm gonna back up just for a moment, okay? I'm gonna back up just a minute. And what are we doing? Okay. So when you back up and you log on, I want you to understand the power of this tool that you have in your hands, okay? I really, really want you to understand the power of the tool that you have in your hands. And the power of this, now, when you log on, you know, if you like me, it says I've been waiting on this training. So now if you understand, I got a 777 times 3. Now if you log on, it says, okay, this is revolutionary training. And it enables you to trade like a bank, okay, from the comfort of your desktop or smartphone. So if I'm pointing this out because if you're like me, when you see something or you log on to something, a lot of time, you know, you one of those people that don't read the directions. I want you to read the directions, okay? I'm gonna slow you down for a minute because I really want you to read the directions. I want you to understand, okay, the power of this tool. All right, we're reading the directions. And so when it says trade like the banks, so I'm gonna play this, okay, because I want you to understand. Now this is Mr. Rogers. You see him, his text, you hear his voice sometimes, but his background is in investment banking. So I'm gonna just play this for just a minute.
Wow, folks, I'm just absolutely amazed to know that I'm a part of an organization looking to empower and impact lives across the globe. I've been in this space for over 20 years, commercial banking and lending, And when I look at the web analyzer in comparison to what the big banks of the world utilize, that web analyzer is equivalent, far exceeds the expectation that I was anticipating after having that experience on the investment market. So folks, for those of you who don't understand the magnitude of what you have your hands on, I encourage you, I challenge you to take a deeper dive and realize that literally you have in your own hands the power to become your own bank and allow us to be your partner, to empower you economically, financially, and leave a true legacy.
So I want you to understand the power of what you have in your hands with this tool. This alone. So we had breaking news this morning. It was the feds. When you're talking about the banks did a bailout, the banks did this, the banks did that, the banks did this, i.e. BYOB, be your own bank, right? So why do you think we call it that? And then you got someone whose background is in investment banking. So just really, really, really want you to grasp and understand the power of the tool. And I'm going to address it because, that's what we're here for. We're about educating and empowering. So, I saw a trade, I saw this, and the vibrata, it's not really playing out. No, it's not meant to give you a signal. Okay, these are not signals. And I really want you to understand that everything is not a quick 10 pip, let me grab it and go, okay? Or my trade is ready at this moment. I'm gonna work on your patience a little bit tonight because your patience is going to build your wealth. Okay, your patience is going to build your wealth. That's where it's going to come from. So your patience is definitely going to build your wealth. Your wealth just generated in your patience a little bit. Now, I want you to think about something. When you go sit down, remember my background, financial advisor, Series 6, I took all those tests that become with that. I have taken the 6, the 65, the 63. I've done all that stuff, right? I've done it, got the t-shirt. So what I'm saying is when you sit down with someone and you do that, you wait till and you leave it as subject to the market in order to get a retirement account. So if I can wait 10, 20, 30, 40, 50 years to get a retirement check, I can wait I can wait an hour for a trade to manifest. Even if it took a day, I can wait for it to manifest to build wealth, right? That's the mentality that I want you to have. And that's what I'm trying to show you here tonight. So everything is not chasing a trade, so I'm gonna show you how to walk through that. But first, I want everybody to understand how the BYOB cash out works. So I'm going to show you how that works, and then I'm going to show you how to, use this tool, and we're going to talk about the Confluence because I'm going to show you the strategy, some time frame Confluence, and then we'll talk about some of the trades that this tool called the Vibrata. Now, so first thing first, we have the stochastic, okay? We got the stochastic. So we got the blue line cross over the red in the upward position. The stochastic is a leading indicator. Understand that it is a leading indicator. Then you have the Hikinashi candle, and then you have your PSAR. All three of these are indicators. Your stochastic is a leading indicator. This is why we always look at this first, okay? This is why we look at this first. My Hikinashi candles and my PSAR are lagging indicators, okay? These are lagging indicators. Now, that is why I look at them after. So, of course, if it's a leading indicator, it's going to lead. It goes first, okay? So, now when I look at this one, okay, now I got when I'm looking at this one, you see how this blue line crossed over the red. It started here, it started pulling up, didn't manifest, came back down. So my keyword in this is around. Keyword is around. Notice we're looking at past trades, okay? I'm looking at a few past trades so you can actually understand what transpired, okay? You can actually understand. So blue line cross over the red and the upward momentum. Here, I'm gonna grab arrow. When you're trading, please don't grab arrow. We're gonna talk about, that will definitely affect your pip reaction time, okay? I don't want you doing that. The only reason I'm putting the arrow on this screen, is because I want everybody's eyes on the same thing. Now, what do you see me doing? Before I go any further, you see me analyzing on the Vibrata. You see me analyzing on this website. It says imlwebanalyzer.com, right? That's where I'm at. I'm not on MetaTrader 4. I am on the web analyzer. So this is where you need to be, okay? If I'm on the web analyzer, you need to be on the web analyzer. If you want to trade on your phone, then you need to pull up imlwebanalyzer.com. You cannot do this on MetaTrader 4 on your phone. Why is that? This does not have Hikinashi candles, okay? This is housed in here. So this is where it's been back tested, okay? This is where the strategy has been back tested. So do not try to circumvent the system. You know, this is where you need, so you enter you analyze here, you enter, yes, you still need MetaTrader 4 because that's where your transactions take place. So you analyze here and you enter your trades on MetaTrader 4. That's where your transactions take place. So I just want to make sure I make that clear. Like, so don't, yes, I'm going to need both. I'm going to need my phone and I'm going to need the computer I'm looking at. So don't try to be looking at your phone trying to put this in there. Your phone does not have Hikinashi candles. So, you know, I understand it says you can trade from your smartphone. Yes, go to imlwebanalyzer.com. So I just want to make that clear. So, see, it's all, see, we got somebody that's been thinking it. You always been thinking and wondering about that. So now you need to be here where, so now, so blue line cross over the red, blue line cross over the red, and downward momentum. If it happens here around the 80, I'm looking for a sell. If it happens here around the 20, I'm looking for a buy, okay? Now, so when I'm looking at this and it's going for a buy, and I'm glad I'm glad that addressed somebody. Some of your trades might work out, but I'm telling you the majority of them won't. So just make sure you're doing it that way because you will run into some issue. You know, we're trying to build wealth, not hit or miss. So that's very important. And so when this blue line cross over the red and this upward momentum, this crossover and cross up is very important, okay? You notice that sometimes it can get to that, I was trying to see if I see one, it can get to that 20 and it can keep going, like it'll keep going. Or you can get up here and it'll keep going. So that crossover and cross up is very, very important. Now, I know I'm looking for a buy right here. So here, now I'm looking, once I know I'm looking for a buy, I begin looking for things that correlate with the buy, right? Now I'm looking for things that correlate with the buy. So what's correlating with the buy? I need a green candle with a flat bottom and I need a PSAR flip. What did I get first? It doesn't matter up here because both of these are lagging. The only one that mattered was the one down here, which is my stochastic. So my stochastic told me to look for a buy. So now this is the strategy and the simplicity. That's it. That's the BYOB cash out. But why do we do anything else? Why do we do time frame Confluence? Why are we looking for anything else? Because we want more, we want to increase our accuracy, right? Because this is the 10 pips and cash out. That's strictly scalping, right? I don't know if I'm counter trend trading. I don't know. See, I know this trade worked out at this point, right? But this literally is what all you would have seen at that point. So you don't know what the trend in the market is doing. You don't know where you are in the market. You don't know anything. You don't know your pip reaction time. You don't have any understanding about anything else. If you didn't have to think about your pip reaction time, if you didn't have to think about your broker spreads, if you didn't have to think about any of that, you could just grab your 10 pips and go, right? So we want to increase your accuracy and we always want to put you in a winning position. So now we want to kick it up a notch and we want to begin understanding time frame Confluence. And so that is why that's important, okay? That's why that's important. So now what I want to do first is I want to, you know, I mean, you can do it, you can check the hour first or the 5 minute, but I always drop down first. So drop down to the 5 minute. 5 minute needs to be buying. If my 5 minute is buying, so 5 minute says, you know what, I'm 5 minutes buying, that tells me I'm not entering a trade in a correction. Why do I want you to get in the habit of that? And let me make this clear, because it's not just a scalping strategy. If I get in a correction on a 5 minute, is it really that bad? But it's not really that bad. technically, right? You know, you can't see me, but I'm like, you know, you do your little quotes on your fingers kind of thing. But technically, it's not really that bad because you know it's coming around. But it's not just a scalping strategy. If I get in a correction and I'm trading on an hour, is it that bad thing? So what we're doing is I want you developing the right habits. Okay, I want you developing the right habits. How you do one thing is how you do everything. So if I get in a correction on an hour, my correction on an hour is much more significant than a correction on a 5 minute. A correction on the 4 hour is much more significant if I'm trading on a 4 hour, like if I'm a swing trader, right? So that's much more significant. So if we're training our mind, if we're training our habits to do things the right way, we want to drop down and we want to begin getting in the right habits immediately, right? So yeah, I went from the 15 to the 5, correct. So I need that one to also be going in the right direction. So now I want to go to the hour. Why do I go to the hour? Because, you know, a factor of 4, 5, or 6. So now when I come up here, this needs to be, it needs to look like something I will put on my watch list, okay? So I got a green candle. Remember, none of this is played out yet. What you're looking at is this right here. None of that is played out yet. So it need to look like something I put on my watch list, which it does, okay? So now that it looks like something I put on my watch list, and now it's even more comforting to know. Now we normally looking at this candle and I get this question a lot. Look at my stochastic. See, this is a nice setup. So so now we're starting to even talk Confluence right here. Look at this, how my stochastic is going up, and look at my candle and my PSAR is already flipped. Does that have to happen? No, because remember the 15 feeds the 30, which feeds the hour. So technically, all that's not gonna have happened yet, right? We not gonna have all of that yet. So because I'm not gonna have all of that yet, so you know, I'm really not that concerned about all of that just yet. So I just want to kind of make that clear, you know, but it has to look like something I put on a watch list. This one just happened to already be worked out. So this is the swing of the market, and we will get into a little bit more clarity on that in just a second. And then the 4 hour is going to be my trend of the market. So this is going to be my trend of the market. So you can kind of see where that's actually headed, right? So that's that. So now that's the BYOB cash out. And then, so I just wanted to walk you guys through that. So let's actually jump over to my others. Let's jump over. I want to jump over to here. What I did is I actually pulled some trades. So we wouldn't be on the call trying to fumble through here, right? So I actually pulled a few of them. I pulled 3. So when you're actually going through here, okay, you're going through here, some of the things that you find are that you'll see these called a few times. You know, you'll see them called back to back, or you'll see like that's a back to back one, or you'll see it called like, and you'll see it called a few hours later. You might see it called for a buy and you'll see it called for a sell, right? And you'll see it called, right? And so that's what we're talking about right now. So what I did is, you know, I kind of got it set up, and one of them, when it caught it, it literally caught it on the same line twice. So it literally caught it on the same line twice. So what the Vibrata does, and I don't want to accidentally hit it, so I'm gonna come back to this one. I want, you know, because I want to make sure I don't hit it. So with my mouse, how do I zoom in to make the candles bigger with my mouse? I have a Mac, so I don't have a little roller thing, but I use, it's hot. It's just with your mouse. So, but I think on a regular computer, it's just with your mouse. So I don't know what kind of computer. So yeah. So so as I'm sitting here looking at these, right? As I'm sitting here, so what happens is like when we click this one, I think we did this one. Like I don't trade the lower time frames. I typically will pull the higher ones. Those are the ones I like. So once again, this is all just gonna be personal preference, what you like, but I'm gonna just kind of show you how they work. And so you can just click on, you come through here and you click on what you want. So I really haven't seen too many that fall through here on the daily, but the hour and the 4 hour are some where I can kind of come through here and pull, and even the 15-minute, you can come through and you can pull some on this 15-minute, right? And you can kind of see what comes through here on the 15-minute. We've done a few trainings on here, but I wanted to highlight, we've done a few trainings on here and I put them on a playlist on BYOB Challenge on a YouTube channel, but I wanted to really kind of dig a little bit deeper to help you understand the confluence behind it, right? I wanted to talk about the confluence and flipping through the time frames, because I think when we did the training, we went over it and highlighted the tool and understanding that these are entry triggers. So like, I'm gonna take the 15-minute off. So like, if I come through, or if I just have them all on here, just to kind of show you, since we're already on GBP AUD, just to kind of show you, if I grab this, highlight it, right? So this is current, right? Just to kind of see what time frame you're looking at. You see that 2.02234 come here, 2.2234, right? Okay, and you can kind of see that's what you call an entry trigger, okay? This is an entry trigger. And so this was actually called 12 minutes ago, and it was called, and it's gonna flash unless you come up here and you pause it. So it was actually called at 1:10, and that's the UTC time, okay? So this is when this was called, okay? And so this, but the point I wanna make here, because I'm not gonna analyze this one, but the point I wanna make here is, even in looking at this one, where was this done? Because it was a potential sale, and then you notice, oh my goodness, it went up, right? But it was a potential sale, but it was called at what? Because I wanna address this. It was a potential sale, but it's also on what? What line is that? That's a support and resistance line, right? Isn't that what it was called on? It's an entry trigger. That's what it is. It's an entry trigger. So it's always identified around those. But if I flip up, right? If I flip up, you notice it's all, I have it marked up already, because this one is still playing out for you guys. And I want you to see some past trades to show you how this is gonna actually play out. So let's go here. So what I did is I went through, like this was called on the 4 hour, right? This Euro AUD, it was actually called on a 4 hour, and then it was called on the hour, and this one was called for a buy on the hour, okay? So this one actually got called 3 times, okay? So they called it for a sale, and then they called it for a buy, and you can see where it was called for a sale, and you can kind of see where this one was actually called for a buy, okay? So this actually goes through, and you notice how it's all still within there, but because we're on the higher time frames, I want you to look at, so you got 20 something pips in there, but this is the range in between these calls. But I'm just trying to highlight the fact that it triggers. So remember, I told you guys that when you're looking at a support and resistance line, you got a range of activity where things happen. So you're looking at this one, and of course, it's looking a little consolidated a little bit right here. But even in that, you're seeing how this triggered entry triggers, and it triggered notifications of activity that's happening within here, okay? And I'm just trying to point it out for training purposes. So if I'm looking at the one, let's look at the ones. What do I mean by range? So whenever you have a support and resistance line, okay? Whenever you have a support and resistance line, you literally have, it's not, I can't tell you, okay, hold on. I'm gonna flip back over here because I don't wanna mess up my lines. So if I have a support and resistance line, this is where it touches, but there's always a range, right, around that line that where it can touch. So you notice how when a trade will activate or a trade will get ready to activate, or when you go to take your profit, it'll seem like you're in that zone, but it won't take profit, or your trade look like you were trying to get to that point and it never activated. So it's because it's within a range. It's always right, a span of designated area. So it's, you can't, just because you cannot have a definitive line in the market. We draw the line, but if I go to my line chart, right? I go to my line chart, I mean, look right here. So I got my touch here, I have a touch here, I have a touch here, but look how far, this is a little bit off right here. So this is, it's a range. It's like a area. It's a little, like in the chat, it says a span. So if I'm looking at this is like above and below this line, there's always like a little area. And so that's why when I give you guys, or we're trading together, or when we're doing something, and I'll tell you to cushion your take profit, or I'll tell you I'm a cushion to take profit just a little bit, I do that because it's like you guys will put that number in and you'll just sit there and look at it and just be like, it's 1 pip away from my take profit. It didn't hit. It didn't hit? And if you say, I'm like, close the trade. It's right there, you know, because you'll sit there and watch it get so close and it'll pull back, and it'll get so close and it'll pull back. And it's like, what are you doing? Close the trade, you know, if you know that it's about to turn around or something like that. So, you know, that's because it's right there in that range. If you know the market's about to turn around, or you know something's gonna happen, you hit, you took profit, you hit, you're right there in that area. Just like this would have pulled up right here, and then this was a correction, and then it pulled back down. This was literally a correction. So why wouldn't you take profit right there? You know, I'm not saying this would have been a trade we were in, but this was literally a correction. So somebody might have been like, they were looking for this to trigger, right? They would have been looking for this to trigger their trade. And if I'm looking for this to trigger my trade before I would have started a sale, but they would have been like, it didn't activate. Okay, you could have, I mean, I wouldn't have not taken a trade. I would have still taken the trade, you know? So you got so many people that sit back and be like, my trade never activated. Well, it's right here. It's a range. You guys you're looking at it. So this is why we empower you. So you don't sit there and look at this right here and be like, well, my trade never activated, you know? Because there's no reason you should miss that trade. There's no reason you shouldn't be in it, right? All right, so that's what that means, and that's why we say that. So, all right, so let's go back to where we're supposed to be. See, you've had it happen, and now you know why, right? Now you know why. Let's stay on track for what we are talking about, and if we got time, I'll come back to that, okay? Oh, well, actually, that's an easy question. After verifying the confirmations, at what point do you enter the trade? Immediately. So immediately. So, pip reaction time. Yeah, you got to let them know about that pip reaction time. So, all right. All right, so let me, okay, where was I? On here. So, okay, let's talk about the one that was called right here. So this one, okay, is called on the 4 hour. Okay, so let's talk about the one, let's talk about this one right here. Okay, let's start right here. So this one is actually called on the 4 hour. So we want to talk about Confluence. So this one is called for a sale, right, on the 4 hour. And so that means it pulled up on the 4 hour. But what is my 4 hour doing? So actually both of these, an hour and a 4 hour, were called on a sale on the 4 hour. And so what you guys would have done, you were like, but it's in a buy, it's in a buy. You know how many times I've heard that? It's in a buy, the Vibrata, oh my goodness. No, it calls it in a correction, right? And I really want to say, you know, because it's helping you set up. So think about this. If this called the trade right now and it's ready right now, how many of you all would miss the opportunity to take a trade? So, because do you see it every single time? So it gives you the, exactly, all of us, right? All of us, because you know, this thing is going off all day. So it's giving you the opportunity to set up a trade. Everything is not about fast money, right? It's all about properly setting up your trades. So this is literally called, and so you're looking at this, and this is green, and now I'll come down here and I'm looking at my stochastic. What is my stochastic doing? My stochastic is, I got the blue line crossover red and the upward momentum, right? So now this is for your higher time frame, right? So now remember, I'm on a higher time frame. And so this is where I want you to begin getting your understanding from. Then you bring it down and you can start doing the 15. I'm just on a higher time frame trying to help you understand Confluence. Because where do we go check we check our higher time frames to help us understand where we are in the markets. That's why we start there. My higher time frame helped me understand where I am in the market. So if I wanted to understand where I was in the market on a correction, then I'm gonna check my daily, right? So this, down, the purpose of this training is Confluence. I'm not telling you to trade the daily. It's just to help you understand where you are in the market. So if I check my daily, what is my daily telling me? My daily's in a sale. So did it call it accurately? Because it just told me it was looking for a sale, right? So it actually called it accurately because it called it on the 4 hour. So for those of you all who pull a trade off of a potential trade off of the 4 hour, okay? If you pulled a potential trade, and let me make sure I'm looking at the right one. Well, actually I am. So, because I'm on the daily and all these happened today. So if I'm looking at the potential trade, then my overall trend of the market today is in a sell. So it actually called it correctly because it called it on the 4 hour. So the 4 hour was called in a sell, okay? So it makes all of us a signal. Exactly. So it actually called it correctly. So now, but do I trade that high or so now what you want to do when you're trading though is drop down. So you understand where you're going. So understanding the confluence, okay? You're understanding the confluence. So I want to drop down, okay? So I want to drop down. It was called on the 4 hour. I understand. I check my higher time frame for my confluence and I drop down, okay? And when I drop down, that was called on the 4 hour. You let it finish its correction out. I got my blue line cross over the red. And this one just hadn't played out yet, but you can kind of see what would you be looking for, right? Because remember, we were looking at one that was in consolidation, and that's okay. It's just the point of helping you. I pulled this to help you understand. So this one had just happened to be in consolidation, but they play out. Trust me, they play out. You guys took several trades this morning, and some of those came from here as well. So, but they play out. And so you're looking at this and look at where we are. But let's say I could even drop down even further. So if I drop down even further, the 15 is a tighter entry, see? You thinking ahead of me, and that's where I'm headed right now. So if I let it play out, and if I would have went, see, look what's happening. I got my blue line cross over the red candle with a flat top, and voila, right? I got all of this. And so where can I take that trade to? I could take it to a support and resistance line. So I didn't have to trade it on the hour. I could drop down to the 15 for a tighter entry. And hold on. Drop down, and that's still 50 pips that I got. You see that? Do I need to walk back through that again? The PSR did flip from where I'm at. I didn't take the trade till the PSR flipped. You say, wow, I really need to see that again. No. What I did is I pulled it from, it called it on the 4 hour, but it also called it on the hour. So sometimes you'll get multiple calls. So if I can take a trade, you can take it, you can drop down for a tighter entry. All I did is I'm working within 3 time frames. So 4 hour, 15 tighter entry. Had they called it on the daily, which you're really not gonna see none on the daily, but let's just say they caught it on the daily, then I would have took it on the hour. 4 hour, then I can tighter entry on the 15. You don't want to go no further than 3 time frames for a tighter entry. That makes sense? You want to stay within 3 time frames. So even like this one called for a buy, this was on the hour. So I'll do it again though. So this was on the hour, and then I got another one pulled up too. We can go look at that one and come back to that one. So this one was on the hour for a buy, okay? So this is on the hour for a buy. So you see, it looked like I'm in a sell. So I went to the higher time frame to check my confluence, okay? I went to the higher time frame to check my confluence. Blue line crossed over the red in the upward. So where I am, this is where the entry trigger was, and this is where that yellow line is where my call price was at. So I went to the higher time frame for my confluence, okay? That's what this is. So when that finishes, you know, when that correction finishes, because that's all it is. So we know what I'm looking for as far as confluence. I'm looking for it to be confluent with the higher time frame that I'm working with. Now you see why I'm checking the higher time frame, right? That's what I'm checking the higher time frame for, is the confluence. The same thing we do when time frame confluence, right? Same thing we do, time frame confluence. So if I'm understanding correctly, we get the signal alerts, which say, yeah, you get the alerts. Then you go to the lower time frame for entries. Correct. So, right, I check the higher time frame, it's showing you the confluence, and then I just drop down, right? And actually you can tighten it up a little bit from there, but for the 5, but I don't never really go that low, but I mean, technically you can, but, and you can kind of see on the 15 where you, and that's just, you know, and that's what it is. The lower time frames are for tighter entries. That's what they're for. And like the, you know, scalping, good, you're getting it. How do you determine confluence without using arrows? The arrows, if you think what I mentioned in the very beginning, the arrows are so you can stay with me. The arrows, I only drop the arrows there so you can follow with me for trading, because we're looking at past trades. I can't show you how a trade is going to play out. You know, I cannot show you how a trade is going to play out if I don't, you know, go to a past trade. So if we, honestly, because if I come look at this one and I say, okay, just trust me, it's going to play out, you guys are going to be like, yeah, you know, I see it, but they called it the opposite direction, and, you know, so I want to show you how it plays out. So now that you see trades playing out and multiple trades playing out, then you see how it works. And then you go back. That's the point of the arrows, only because we're looking at past trades. And so this is what okay, so you're saying tighter entries are good, but what's really going on? Oh, yes, tighter entries are good, but what's really going on is the overall. And not really, the only reason we went to the daily candle is because it was called on the 4 hour. That's the only reason we went to the daily candle. So you never see me check confluence on the daily candle. The only reason we went to the daily candle is because confluence was called on the daily candle. So if it's called on an hour, then I'm checking a 4 hour, right? So all right, you got it? But if you want to profit, and from the buy and sell, then you look at the title in, right? So, and this is, that kind of goes into what I was saying about, that goes into what I was saying about, you know, why do we drop down and make sure that you know, like when we check the 5 minute, if we are, you know, when we're on the 15, go to the 5 and check the hour. Now you see why we need to check that 15, because if I'm trading on the hour, right? So let's say, okay, that was not set up. Let's just say this is where our entry was. Okay, I'm gonna put something, I'm gonna put a check so we don't, I don't have a different type of something right here. I'm gonna just put a check right here. So now let's check my 15. So I'm looking for that check. So you see, oh, I didn't mean to do that. No, see, I told you I didn't want to move it. I knew that was something crazy was gonna happen. All right, so this happens to still be in a buy. So this is why this is important, it's in a buy. So I'm in a buy, but let's just say it was going into a sale, okay? Which one would be in the sale? So if I was, you know, a correction on this, you know, for the hour. So this is actually going into a buy where this buy started, that started. But you know, if this, let's just say this correction. Let me try to get that question answered. And I see you guys as other questions. I'm going through them one at a time. So this correction right here, let's go down to the 15 minute and let's measure that correction, right? This is why we create those habits, okay? Now this is that correction, right? We just circled that correction. Now let's measure that correction. That's 121 pips. So on a 5 minute chart, and I just kept it inside that little window. But on a 5 minute chart, it might only be 10 pip correction. But 121, do you really want to ride that correction out? So you see why it's important. So yeah, I can enter a trade, but do you see why it's important that I need to drop down with time frame confluence? So yeah, I might have my hour and my 4 hour lined up because I'm trading on the hour, right? I'm trading on that hour. I got my hour candle. I got my stochastic. I got the blue line crossed over red and the upward momentum or downward momentum, whichever way you're trading. I got it all lined up. It's good to go. I got my 4 hour confluent with me, and then I'm gonna go check I don't check my 15, right? And you go to take that trade, and then it's like, why am I negative? And when I'm still negative, and I'm still negative, because you did not drop down and check the lower time frame to see if you were in a correction. So on the 5 minute, it's okay because it's only 10, 15 pips, right? And then it's gonna turn around and okay, it's good. But on the 15 minute, voila. We have to ride that whole thing out. So that's not what you want to do, because those corrections are much greater. So it'll come back around, but why not use the 15 for a tighter entry and capture those pips as well, and let them ride with you as far as the trade that you're trying to take, right? Would that make more sense? That's why we want to grab that 15 for a tighter entry. And the other question is, let me see. Stop loss, above or below the PSAR, that does not change. Your stop loss is above or below the stop loss. I mean the PSAR, is above or below the stop loss. Your stop loss is above or below the PSAR. So, that's just a scalper. So if I'm on an hour, if I'm trading off the hour, it's an hour. If I'm trading off the 15, that's the 15. So, you know, that's just, it's just personal preference, you know. And honestly, on a 5 minute, if I'm on the 5 minute chart, then what has to happen is you're going for less pips. Like if you're trading on a 5-minute chart, you're honestly looking for less pips, and you're confluent with the 30. And I'm trying to create you habits that are going to build your wealth, not habits that are just to get you in and out the market, that are going to grab you a few pips to chase some money and grab a whole bunch of trades. You know, that's some serious scalping. You know, that's why I don't. Now, do, you know, for like things that move fast, like the indices and things like that, then yeah, you know, you could scalp that. I mean, not scalp, but yeah, we go down because of how fast they move. But, you know, I know some of you all do scalp the 5-minute, and that's fine. But from an educational standpoint, I don't teach that. I mean, I've shown you how. I think I've done maybe one video or something talking about trading this. And, you know, for those of you all that want to do it, I mean, you know, it's the 1 minute and the 30-minute, you know, that's what it is. But am I going to get up here and trade it? Not, probably won't do it, because I'm looking at teaching you how to build and keep, not chase. And that's what the difference is. So, you know, I want you to have wealth and not just a couple dollars in your pocket. It does make a difference. Right, that's what I'm saying. That makes a difference. Now you can 10 pips and cash out, you know, compounding properly with good discipline. You definitely can. You really can build a good account with that, you know. But, you know, I want you to understand that you don't have to stay there if you don't want to. So you definitely don't have to stay there if you don't want to. So I really want you guys to understand that you can do a lot more. So let's see. So here we go. You got GBP AUD. It was called on the hour. Okay. And I think this one was called. Yeah, this one was called for a buy. Okay. I didn't put the arrow on there. See, this is the purpose of the arrow. I remember too. So no, this one was called for a buy. And, you know, so looking at this one called for a buy, so I go to the higher time frame, so you can kind of see that confluence, right? You see that confluence, it was called for a buy on that 4 hour. And so when I'm looking at it, the hour, you see it had to come through its correction first, and I can go down for that lower time frame for a tighter entry. So when I do that, you can kind of see when that correction played out. It had a little bit right here, that correction played out. Now, honestly, some of them will trade up to that line. Now, this GBP, right? So when it traded, but when that correction finished and it traded up to that line, that was 72 pips. Okay, that was 72 pips. So our take profit is still up here on this line. So that was still 72 pips based off of that entry that we were able to get. So that was 72 pips that we were able to get. Blue line cross over the red in the upper momentum. I got a green candle with a flat bottom. I got a PSR flip, and that's 72 pips right there. 75, you know, based on how. So you can use this tool as things to help you set up your watch list and trades that you're looking for. So, I mean, they called it on the hour. And I mean, think about it. They're calling it on the hour, so I don't have to sit here and wait. You know it's got to finish its correction. So, you know, that's an hour. So, I mean, you think about it, right? I'm not sitting here just looking. You know, you can look at a couple of them, set up a few, and you can just come back. I'm not just sitting there at the computer. So what did that mean? That meant that I was just waiting. I wasn't just sitting at the computer looking at it. So I just grabbed a few, and guess what? I just came back. You know, I didn't have to sit in front of the computer all day. So you know what happened on the hour candle? How often do the candles happen? Every hour. So I'm not staring at the computer all day. You know, you can kind of time it, or you can come back, or, you know, this is in your learning stages as you're setting up, right? And you can, hey, it's profitable, guys. I'm just trying to, you know, and these trades come out and voila. And then honestly, are you gonna catch them when they first come out? By the time I catch most of them, they almost ready. I'm gonna just be honest with you. By the time I catch them, but let's just say you catch them in the beginning. Because sometimes when I log on, I just scroll. The first thing I do is I put this on pause. I pause my updates, And I just scroll down. I just scroll down and where do we start? Let me start down here somewhere, you know, and I start looking from that standpoint. So you don't have, you know, kind of see where it's at. Yes, this call is recorded. When trading on the When trading on the 15-minute, it's a buy. I drop down to the 5-minute. It's also a buy. When I go to the hour, it's in a sell close to the 20. In a stochastic. No, you need to wait till then it's not confluent. You need to wait till it turns into a buy. So what do you mean? When do we look at bullish and bear? This is bullish and bear. Buy and sell is bull and bear. That's just another name for it. So you need something more specific, or was that just clarity? Right, when you cash out, so that would be your take profit. That would have been my take profit. That's what I mean by cash out. Okay, awesome. You got clarity on that. These are the alerts. So did this help you? This should have helped then. Hopefully this did help. All right, so all right, so I'm making sure I'm just trying to make sure I got all these questions answered. I'm just scrolling through the chat. When you go through the academy, it's going as far as taking profit. That's when you put your take profit in there. So cashing out is just taking profit. You know, that's just the terminology. If you haven't been through the academy, that's something that's really you'll get a lot of clarity from in there when you go through that on the take profit. So the hours was a buy. Okay, Confluence is when the markets are sounding and looking the same enough to take a trade, like you said. Sell, but the hours was a buy. They're not speaking the same language. Right, so Confluence is just like, okay, so like right here, the 4 hour right here. So this triggered, it got a trigger. So what the Vibrata did is it called it, it triggered it, right? We got the trigger, right? We got the trigger. You see the 4 hours in that buy, okay? But the hour is in a sell. So we know that the markets are not confluent. So we get the 4 hours in a buy, the hour is in a sell. Market is not confluent, right? Not confluent at all. So when this finishes and it turns around, that's when it'll be confluent. So, but what the Vibrata did is it triggered us to say, you know what? This is hey, we're in a correction, get ready. So the Vibrata said, hey, we're in a correction, get ready. That's what the Vibrata did, right? That's what the Vibrata gave us. So it gave you an opportunity. And also what you're getting is an opportunity for more than your 10 pips. So more than your 10 pips. So you do, you know what I mean? You don't have to, what she said. You don't have to do, you know, and what this helps you understand is as you're building your account, you don't, and when you understand this and you understand compounding, you'll begin to understand I don't have to make 200 pips a day. I don't have to make, I don't have to, make, so many a day. Yeah, basically, right, exactly. It tells you get ready. So you don't have to, and then you take the strategy, put it on top of it, and you don't have to, like, I know a lot of people have a goal. When I started trading, I had a goal of like, okay, first my goal was like 20 pips, okay? And then it was like 50, and then it ended up being like 200 and stuff like that. But you don't have to have goals like that. You are looking for that consistency. And when you start understanding compounding, you can really, I mean, of course you want goals. I'm just trying to help you make your goals that are realistic to you. Because if I get 200 pips, but if I'm not properly compounding, what did I really do? That's what I'm really trying to help get you to understand. And so if you got, 50 pips, somebody can get 50 pips probably compounding and have more profit than you at 200. So so I'm just trying to help you understand that you just want to, don't chase a trade. And so, yes, let's keep our 777s. We're doing great, but I also want you to understand how you can do some setups, how you can maximize the tool, how you can maximize the strategy, and how you can really do some setups and let some trades ride for you. And you can actually, I don't want you to think you can only do 10 pips, or, I can only do 20. If I did 20, I'm ecstatic. I really want you to understand you can do a little bit more than that. So, and you can, so whatever your trading style is, you're going to trade the hour, trade the hour. If you want to trade the 4 hour, trade the 4 hour. It's all right here for you, right? It's all right here for you. So I hope this brought some clarity to you. I really wanted to take some time and get into Confluence with you guys. We had a great evening. So now you'll know how to come back, do some setups, do a few on your demo account first. See how demo slides his way back in here. Do a few on your demo account first, because you always go back to your demo account anytime you do something you never did before.